Welcome back to the channel, everyone. Today I want to talk about NIO's new battery swapping stations and how these stations and NIO could take over the entire Chinese EV market. I also want to touch on NIO's new partnership and whether the NIO stock is still worth buying. I then also want to give a bit of an update on CCIV or Lucid Motors and talk about whether this CCIV short squeeze that's been going around could actually happen. So stay tuned and let's make some money. Before I dive into the video, I just want to remind you all to subscribe to the channel, ding that notification bell, drop a like down below, check out the links in the description below to Webull and Free Trade, where you can currently get 2 free shares worth up to $1,850 with Webull, and also consider checking out the Patreon and becoming part of the team. Now I want to dive straight in with the key information. So, NIO have just unveiled and began rolling out the second generation of their battery swapping stations, capable of swapping over 312 batteries per day, over 3 times the amount that their first iteration swapping stations could do, or one swap every 4 to 5 minutes. NIO have also recently signed a deal to build over 5,000 battery charging and battery swapping stations with Sinopec, one of China's largest oil and gas refueling station companies. This adds to their deal with the Chinese national grid to build an additional 100 battery swapping stations. Now this is absolutely brilliant for NIO. Not only are there going to be more battery swapping stations all across China to make it more and more viable to not only own an EV, but to own specifically a NIO car, but it's also great publicity for them. Many people are going to be driving their old, battered up petrol-powered cars onto the Sinopec forecourt and begin tanking up with either petrol or diesel. Then they're going to have to pay what could be hundreds of dollars or renminbi for a tank of gas. While they're tanking up their old, battered car, they're going to see their NIO-owning counterpart pull into the forecourt and get out of their car. The car's going to automatically pull into the battery swapping station. A few minutes are going to go by, the car's going to emerge, NIO owner gets in and drives off to the sunset without having to pay, because obviously the batteries are included in their BaaS, Battery as a Service. This is going to make people want to buy a NIO car, so they can take advantage of the battery swapping stations and not have to pay for petrol. As China and Sinopec begin moving towards EVs and away from traditional fuel-powered vehicles, Sinopec could find themselves replacing the entire fuel filling portion of their forecourt with NIO battery swapping stations. This, in a way, could help NIO effectively take over China, as they'd have one of the largest EV charging and battery swapping station networks across the entire country. NIO would then probably look to try and expand this EV charging network across the entire world through Europe and the US, if they can obviously form the right kind of partnerships, such as their new deal or partnership with Ford. Ford are creating an electric version of their Mustang, or the Mach E, and it's going to be compatible with NIO's vehicle charging network. NIO need to try and continue making these kind of partnerships with big ICE manufacturers, like Audi or the wider VW group, the Mercedes-Benz group, BMW, and more. Effectively, these companies, instead of creating their own EV charging network, can just piggyback off of NIO's existing network. Next week, NIO are also going to be unveiling their new Power Plan. I assume this is going to contain details of their new 7 kilowatt home charger and their 20 kilowatt super fast home charger. Hopefully it will be details such as their cost, their charge times, storage capacity, and so on. It will be interesting to see if these are similar to Lucid Motors energy storage systems. It will be interesting to see whether NIO incorporates some kind of reverse charging or reverse home powering feature, like Lucid Motors are planning to do. NIO are also going to be announcing their new recycling initiative to use scraps of vehicles from vehicle manufacturing and from crashed vehicles and turning them into clothing. I don't know how popular this clothing might be, but I guess any form of recycling or upcycling is always a good thing. In terms of the NIO stock, it's recently been bouncing off this $35 to $40 region, with 12 analysts giving this stock a buy rating, 6 analysts giving it a hold rating, and only 1 analyst giving it a sell rating. That's even more analysts giving it a buy rating than there were 3 months ago, when the NIO stock was actually doing really well. Obviously, the analysts are confident that the NIO stock is going to continue doing well after the current lull and be back towards their price targets of $80, $90 and potentially even higher. Just a quick reminder to scroll down and make sure that you're subscribed to the channel. If you're not and you've already watched some of my other videos, then subscribe and ding the notification bell, because that way you'll be alerted when I upload a new video. Now, I've seen a few videos and a few news articles floating around about a CCIV short squeeze. So, could it actually happen? Well, let's find out. The current short interest of CCIV is around 20%, maybe 15% if you're looking at market beat, or even as high as 25% if you're looking at Fintel, and probably various other percentages from various other sources. From first sight, this actually looks pretty small. GameStop's peak short interest was around 141%. Supposedly Clover has 144% short interest, and a number of other stocks like OnTrack, Blink Charging and many more have much higher than 20% short interest. To be honest, I don't think that CCIV has the potential to short squeeze in the same way that GameStop did. Most of this 20% short interest is going to be people or funds that were shorting CCIV around the $60 region, not around the $20 region or the $19 region. Obviously, if the CCIV stock does go up to $30 a share or $40 a share, some people that are short CCIV could get margin called if they're trading on leverage. However, most of that short interest group is probably shorting the stock around the $60 region. So probably wouldn't really get margin called until at least the $100 region. And as well, just because there's a few people shorting a stock and they get margin called, doesn't mean the stock is suddenly going to short squeeze. Maybe if there was like 120% short interest on CCIV, and then there was some absolutely ridiculous deal where CCIV or Lucid Motors were going to build 10 to 15 factories around the entire world by next year and manufacture more vehicles than Tesla, VW, BMW, Merc and every other car manufacturer combined, and the stock projectiled up to $200 a share by tomorrow, then yes, there might be a short squeeze. But the chances of that happening are none. It's also just been announced that Lucid Motors recently shot their first ad for the Lucid Air. It's going to be really interesting to see where this ad is aired, whether it's going to be an online ad that's shown on YouTube, or like a regular TV ad, or some kind of special half-time advert. They already have a backlog of 8,000 pre-orders for the Lucid Air, and therefore I think that this ad is likely to be shown at some point next year, once they've cleared through those initial batch of orders, to begin getting the Lucid name more mainstream and to start turning it into a household name. If Lucid Motors can become a household name like Ford, BMW, Audi, Tesla and many others, then I think Lucid Motors will have a lot of potential over the next few years and the stock will continue to grow. In terms of the CCIV stock, on Friday we saw the stock fall to new lows around that $19 region. It is a bit of a shame that we couldn't hold that support around the $20 region, but then again, as of late, barely any stocks in the entire market have been holding their support. NIO broke through their $35 support, ChargePoint has continued to fall, so has XPeng, Hillian, OnTrack, Fubo. Basically any growth stock in the entire growth sector has been falling over the last month or two. These stocks have been pulling back to more reasonable levels. Going forward, I do expect this growth sector to recover and to continue growing. Pullbacks are healthy. We can't expect CCIV to be a $50 stock by the end of April, a $75 stock by the end of May, $100 by the end of June, $150 by July, and $200 by the end of the year without one single red day. That's just unrealistic. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Also, be sure to get those free shares with Webull and Freetrade, and consider checking out the Patreon and becoming part of the team. But for now, cheers.